Welcome and thank you for joining today's webinar, The Current State of the Cyber Insurance Market and Its Role in Managing Cyber Risk, with Tracy Grella, Global Head of Professional Liability and Cyber Risk at AIG. You're also joined by Beyond Trust VP of Marketing, Mike Yaffe, who will run through a brief overview of Beyond Trust towards the end of the webinar, so be sure to stick around for that. My name is Sarah, and I'm your host today. And before we dive into the webcast, I just wanted to touch on a couple of housekeeping items. First thing, all attendee lines are muted. However, in an effort to keep this interactive, I encourage you to ask your questions via the chat box in the GoToMeeting console. You should find that on the side of your screen, and I will be monitoring all of those questions throughout the webinar. So just submit them anytime that you have a question, and we'll go ahead and try to cover those at the end of the webinar during our Q&A time. Also, today's session is being recorded, and as attendees, you will all receive the link to the recording via an email later this week. So at this point, Tracy, I'd like to welcome you to the line. Hello and welcome. Thank you for joining us today. And without any further delay, the line is all yours. Please take it away.
Thank you. So good morning or good afternoon, depending on where you are. Thank you for attending this discussion today on cyber insurance. I'm going to start with an overview of some statistics about the cyber insurance marketplace. Talk a little bit about the background of security events and really the landscape, and then go into a little bit more detail about cyber insurance, what exactly it is, what benefits it could bring to an organization, and then discuss some best practices. Absolutely feel free to send emails, as Sarah was saying, through the chat. If there's something that you want me to discuss further, and we'll leave time at the end for additional questions. So, Sarah, I'm sorry, I don't know who's changing the slides, but if we can go to slide number 3. We'll move over to 3. Yep, great, thanks. So cyber insurance actually started back in the late 90s, and many people are surprised to hear that. Most think that this is a new cover being offered by insurance carriers. But back in the 90s, we saw a need for this type of cover. There were some exclusions that were being introduced to GL policies and some concern arising from network security. And so at that time, the insurance market came out with a cyber offering. And it was very slow, obviously, to start to take up. And we've continued to develop that product and enhance it as the market's changed. And certainly, it's been this type of risk has been dominating the news over the last few years, but really starting to heat up. So cyber insurance is getting a lot more attention. It's been growing rapidly. So I have here just kind of the overall market projections of how cyber insurance is growing. For this year, for 2015, I have here that it's $1.6 billion, but there are other estimates that are as high as $2 billion, and just recently I saw an article saying it might be $2.4 billion. I think those are definitely inflated, and the 1.6 is probably closer to reality. Some organizations believe that they have cyber insurance through their GL policies and their property policies. That is not the case. Those policies were not designed to cover this type of risk. It is possible that a claim could be covered under those policies, certain types of claims, but again, those policies weren't designed to cover it, so there's many exclusions that would exclude cyber-related incidences. And so we often see companies say they do have cyber insurance, believing that it's in other more traditional lines. And I think that distorts kind of the market estimates on how big the market is and how many clients are buying cyber cover. So for AIG, we offer cyber insurance in over 50 countries. We provide coverage to over 20,000 organizations, and we insure 22 million individuals for identity theft. We've handled over 65 data breach and privacy violation claims, including many of the highest profile breaches. And we do a lot to raise awareness around cyber risk. For example, we participated in over 180 speaking engagements on cyber within the last year. So there's a lot of events going on around cyber risk, a lot of opportunity to learn more about this exposure. At this time, we've been very focused on raising awareness, but I think that, especially in the United States, that we've absolutely reached awareness. I think all companies are now aware that this is an exposure and that they can have a cyber breach. But we really need to focus a lot more on education. And we've been working closely with the U.S. government to put this problem front and center. We've been working very closely with DHS, Treasury, and several congressmen and senators to raise awareness and to encourage best practices that can be voluntarily adopted by organizations, as well as to ensure that there's a sustainable and robust insurance marketplace. So, I feel the insurance marketplace has been very diligent in paying attention to the evolving risks around cyber and in learning more about this exposure to better underwrite the exposure and to be able to put out terms that are sustainable where you're not going to see huge fluctuations in the market. And you can see that through all the activity that we've had recently. We continue to see new carriers enter the market, and we don't really see a lot of carriers pulling back from the market. The one area has definitely been for retailers where there has been reduced capacity, not necessarily carriers exiting the market, but we've seen carriers limit the amount of capacity that they would put out on retailers. And a lot of that is not only because of all the attacks and because retailers are just going to be targets right now, and some of that has to do with the security that retailers have, and that there's definitely some improvements that are needed there. And as we see those improvements, I think the insurance marketplace will respond by increasing the limits available. But we have 65.
Can I ask a question around that? This is Mike, guys. Hey, nice to speak to everybody there. So you said actually I have like 3 questions, but one is, are the policies technology dependent? That was, so, and you also, and this ties into the question, you also said best practice. Who's best practice? Because if you're in the government, it's FSMA. If you're a processor, it's PCI. If you're in healthcare, it's HIPAA, right? So who gets to say what best practice is? And then does it get down to the technology, do the policies get down to the technology that level of granularity? I'm sorry, that's like 2 or 3 questions in there.
The types of tools that companies are using, you mean?
Yeah, so I mean, like, could my policy be null and void because I don't have an IPS? Or do I have to pay a higher premium? Like, how does that even work?
Okay, so as far as best practices, yes, different industries have different best practices. So from an underwriting standpoint, we would look at those different best practices. But there are some things that I'll go through at the end of this that we see as just the basic hygiene types of things that insurance carriers are looking for. And we feel that a number of the basic tools and techniques can reduce the cyber risk by 95%, by a significant amount. So what we see is in large breaches, there's a very basic things that have gone wrong. Yes, attacks could be sophisticated, but there are very basic procedures that fail at an organization. And so having those basic techniques in place are very, very important. So we're really looking for a low baseline in insurance to underwrite this coverage. It's not about having the most expensive, highest, newest technology tools. That's not what we're looking for. You may be referring to, there's been some news recently about a cyber claim that was denied, and it was based on that the carrier had said, and in their policy, you had to maintain a certain level of security. There were certain things that you needed to do, and this company, I guess, didn't do those, and the claim was denied, and the insurance carrier actually won that dispute. You do have to be, as much as cyber insurance has been around for 16 years, in the world of insurance, that's a very short time frame. So policies like your life policy and your homeowners and your GL, that's been around for decades, and that coverage is more standardized. cyber insurance is not standardized at all yet, and with the quick pace of how tax change and threat factors change and what we're looking at changes, I don't think you're going to see standardization anytime soon. Insurance carriers are trying to be innovative and move forward with the change and provide, coverage that differentiates them in the marketplace. So you need to look at your policy. This is something that's very challenging about buying insurance in cyber risk, and why you need to work with a well-educated broker to do it. You need to look at all the companies and the coverage that they provide. You can buy policies that have exclusions that say if you don't maintain a certain level of patch management, if you didn't encrypt, then your claim is going to be excluded. It will say that in the policy. If it says that, I'm assuming you're also getting credit on the premium because there's less coverage that's offered under the policy. But there are many policies that are available in the market that don't have those types of exclusions. So, specifically for us and certainly other carriers as well, we underwrite to how the organization, how the level of attention that security gets within an organization and how involved the management team is and what part of security, the role security plays in the culture of the organization, how well the company's staffed, what their we review a number of their processes and procedures, which I'll get into a little bit more later. And so we're looking at those things, and we understand that you may have, a rigorous patch management philosophy, but if you're a retailer and it's December, you may not do any patches that month because that's the way you're, that's the cycle of your business, and you're not in a position to do patches that month. So, this is a very dynamic environment, and, what you say at the beginning of the application may not be something that, you can do as time goes on. So there are policies that account for that, and then there's policies that are a little bit more prescriptive about what you need to do. And, again, I'm assuming for those types of policies, you would get a discounted rate. So you really need to look at it, but there is coverage available that is more broad. So there are 65 insurance carriers, so we have a number of carriers and a large selection for clients to look at, and also to build large limits within the market. Companies can buy limits of up to, well, the largest policy we're aware of out there is up to $500 million in limits, but it's common that companies can buy $300 million in limits, and the market continues to grow as new carriers come in and capacity increases. The market's been growing at about 25 to 30% each year for the last 4 years, and about 25% of middle market to large companies purchase cyber insurance today. About 40% of the Fortune 500 buy cover. And although coverage is readily available and it's well priced, we still see that most companies are highly underinsured for this risk. And the risk is going to continue to grow as we see the Internet of Things grow, and the world becomes more dependent on big data and connectivity and use of connectivity. So companies will absolutely need risk transfer to be part of their enterprise-wide risk management program. So we can go to the next slide, and we just have a timeline there to just set for everyone kind of how things have been developing in the space. So we were off to a very slow start when we introduced the product in the late in the late 90s, but in 2003, California released the first breach notification law, and that breach notification law really started to drive interest for cyber insurance. One of the coverages offered under cyber insurance is a response to the breach notification law and the notification of individuals, and that law has spread through 47 states, and all the laws vary from state to state, so it's a lot to navigate, and under an insurance policy we can help you with that process. So that was one of the key turning points in the cyber history. Choice Point was one of the first breaches, It was originally said that there was 163,000 customers identified, identities that were exposed, but as time went on, it ended up over 40 million identities, and we still see that trend today, where when companies first have a breach, later on they realize that the breach has grown. So we see like someone will announce a breach, and then a week or two later, maybe a month later, we start to see those numbers increase significantly as more is learned about the breach, and we realize that more identities have been compromised. The TJX breach was a large breach that got a lot of media attention and really started to drive interest in organizations figuring out how they're going to deal with this exposure. In 2009, the Stuxnet virus was launched against the Iranian nuclear system, which stopped the centrifuges from working appropriately. And this is really seen as the first computer weapon and really a change in what we had seen previously. Previously, the breaches were really focused on financial gain, and now we have a way to use cyber to launch a weapon and cause property damage. We haven't seen a lot of this type of activity, but there have been situations where cyber attacks have resulted in property damage. And this is an exposure that companies, I think we're starting to have a lot of awareness around data breach, but not a lot of awareness around the possibility of having attacks that could be more destructive in nature. But this one goes back to 2009, and there's been a few of them that have occurred since then. 2013, we have the Target breach, which really, that's when we feel we started to get the attention of the boards. Prior to that, we were talking a lot. We're at AIG specifically, we're a lead writer of D&O insurance, and so we have a lot of time with the C-suite and boards. And we would try talking about cyber risk, but we really weren't getting their attention. Once Target happened and their CEO was fired, we really then started to get the attention of the C-suite and the boards. And we've seen through organizations that we work with that are focused on working with boards, we've seen a real increase in the knowledge and what boards are and how boards are trying to get educated in this space since the Target breach. And so I think that's a good thing. We have to really, managing cyber risk is really taking it from the top down. So I think this was a real turning point. We also had the executive order where President Obama required the public and private sectors to work together to come up with a critical infrastructure cybersecurity framework. And a year later, the NIST cybersecurity framework was released. You were asking about best practices. That is one framework that goes across many industries that we are using and making available to our clients, a tool so that they can map themselves to the cybersecurity framework. The Sony Pictures hack was interesting because was said that it was launched by North Korea. So here we have a nation state launching an attack on a business in the U.S. And what does that really mean? What did they want to accomplish? How are we going to react? Is that war? Is that terrorism? It raised a lot of questions. And it also, part of the attack did result in some destruction of computer systems. So we're starting to see that destructive element again that we think will unfortunately become more prevalent. And most recently, we have the OPM breach, which I have here as 18 million people, but I think now it's up to 21 or 22 million people, so that one continues to grow. And what's very interesting about the OPM breach is that although these identities were stolen, you normally would see this type of information being sold on the black market. There's a lot of information, very good, valuable information that's there, but we don't see this information turning up in the criminal networks. So no one's selling it. It was captured and seems to be that someone's holding on to it. It's also coupled with breaches from Primera and Anthem, which were the healthcare providers for federal employees. That information also has not turned up for sale, and healthcare information is very valuable for criminals to sell, much more valuable than financial information and other personally identifiable information. So, we're left wondering, who has this information? What are they going to do with it? Are they using it somehow together? And we really don't have the answers to that yet. So again, this landscape continues to develop and has taken an interesting turn. Okay, go to the next slide. So this is just a quick look at who the actors are and what they're after. Most attacks that have occurred in the past have really been, most attacks that have breaches that have gotten a lot of publicity have been around organized criminals that were financially motivated. And the hackers make a lucrative business out of doing this. So this type of organized crime is just going to continue to grow. We have state-sponsored actors that are really after trade secrets and looking for information that could help them provide information to their states for them to be more competitive. Nation states could be around trade secrets, but also ideological, like we saw in the Sony breach. We have hacktivists that are politically motivated and they want to send a message, they want to make their agenda known. And then ultimately we have terrorists who can use cyber, they could use a cyber type weapon to cause destruction. Let's go to the next slide. So if we go to the next slide, recently there was a report issued by RAND about 2 or 3 weeks ago, and it had some interesting points in there that really it was interviews of CISOs. And so I wanted to just tell you a little bit about that. But Gartner says that $70 billion has been spent on IT security and that this is growing at about 15% a year. And when I see these types of statistics, which I see from a number of vendors will tell me similar things, I just can't help but think, I mean, if we're spending $70 billion and the breaches are only growing, they're not slowing down, is IT really the answer? And so a little bit to Mike's question, about the tools, from an insurance perspective, we don't place a lot of, there are some times that we ask about certain tools, but we don't place a lot of importance on the tools, but really more the implementation of the tools and the environment that the company is operating in with respect to cybersecurity. So if we take a look at the RAND survey, what we learn is that that cybersecurity, one of their findings is cybersecurity has a leadership problem, and that they just don't feel that they have a clear vision of what they need to do. CISOs feel that they're treading water at best, the report says. It would be an understatement to say that organizations are dissatisfied with existing cybersecurity, and there's scant confidence among defenders that their exertions will give them the upper hand against malicious hackers 2 or 5 years out. Many believe hackers are gaining on defenders, and this combination of rising expenditures and questionable success rates creates a sense that security efforts cannot continue on this course. So, there's a lot of confusion about where to go, what the right things are to invest in, and what's really going to make a difference. I was disappointed to see in this report that they said cybersecurity is a hard sell to the chief executives and the board, because this is an area that we've been very focused on for the last couple of years, and I feel like we are making headway here. But it is very important that the top of the company views cybersecurity as extremely important to the business, and that they're giving the company the resources that they need, and not just in IT, but in other areas of the company that can help manage this exposure. We talked to cybersecurity vendors, and I've had some of them say to me, if you just talk to the CEO, you can tell if the company has good security or not. The involvement of the CEO is extremely important in the managing of cybersecurity risk.
When Tracy, whenever I go in and we talk, I always ask customers, I'm like, so what kind of shop is this, right? And they get it, right? And the inference is, are you the kind where security is an afterthought and you're locked in the closet, right, and you get fed once a day, or do you have a real role? Do you report up directly to the CEO, or do you report to legal, who reports to the CFO, or who reports to, where's the seat at the table? Or do you even have a seat at the table? I have seen it change a little bit lately, where I think boards are asking, and I got to tell you, between Snowden and Target and Sony, because Sony was such a material impact, not that, everybody's name gets breached and you get a new credit card, but it screwed up a movie, right, which everybody kind of got. I've seen a shift in the last 12 months. I think we have a little bit of the CSOs getting a little bit more of a voice, but I agree. I think that the challenge is, not for lack of a better pun, but people traditionally have thought of information security as insurance, right? You only want to buy as much as you need, right? You don't want to buy any $1 more than you want. Right. So I think getting people out of that mentality and helping them understand that if your business is more secure, it can be a differentiator.
Absolutely, absolutely, and it's a great point. That's one of the questions that we do ask in underwriting is about the reporting structure. Does the CISO have access to the board? Is the CISO reporting to the chief risk officer or the CEO? Those are things that we think are more favorable. Those are things that we look at. So yes, that's a good point. Threat intelligence was something else they commented on. And they said threat intelligence is a buzzword that everyone's excited about, but no one knows what to do with it. And the pessimism also extends to the government's efforts to help improve the situation. So there's, I think, 3 information sharing bills that are with the government right now. I think most organizations believe information sharing is a positive thing. But the problem is that companies are inundated with so much information that they don't know how to sift through it and what they should be paying attention to, and they don't have the resources to pay attention to everything. And then, getting information potentially from the government, there's concerns about that information being very delayed, and how effective is that going to be. So, I think everyone thinks threat intelligence is good, but what we're seeing is that there's so much intelligence coming at organizations that it's just hard to sift through it and be able to use it to your advantage. And another finding was that a common sense element found that people-centric investments such as technologies to automate security management, advanced security training for employees, and higher security staff led to greater cost savings down the road. Organizations with high levels of security diligence curbed costs of managing security by 19% in the first year and 28% by the 10th year, compared to organizations with low diligence. And this is really what we've been driving in insurance, that it's not about the IT alone, that cybersecurity is an enterprise-wide risk management issue. And it's about the people being well-trained. It's about engaging the senior team. It's having the appropriate protections in place from a legal standpoint. And of course, it's certainly the IT as well. So many parts of the organization need to work together to have strong security. This isn't just an IT issue for the IT teams to solve. So let's go to that. So I'll tell you a little bit about cyber insurance and just try to keep it simple. But as I mentioned before, cyber insurance policies vary greatly from one carrier to another. But what is consistent is these 4 coverage parts you should find in your cybersecurity policy. The way companies go about it, exclusions, things like that could be different. But in general, cybersecurity policies are really a suite of different products that provide different types of protections. And the first protection is really around liability. So the policy will respond to claims made against the insured. It'll provide defense coverage and damages. We often see this triggered with class actions. So if a significant amount of personal information is released, you will see a class action, and then the insurance policy will respond to that defense and pay any resulting liability or settlements. The second coverage we call event management insurance. People call it breach response, incident response cover. And this really responds when the breach first happens to the cost that a company has to incur. It pays for the forensic costs. It pays to figure out who needs to be notified. It pays for those notifications. It pays for public relations. It will pay for call centers, legal consultations, identity monitoring, credit monitoring, all sorts of services to help mitigate any potential liability down the road and help to respond to the breach the breach disclosure laws. The next cover is the network business interruption, which is really business interruption loss. So if a company suffers from a denial of service attack, the policy will respond to the loss of business income after a stated waiting period. And then the policy also provides coverage for cyber extortion. Cyber extortion is when we have hackers will come and they'll say that they're either going to encrypt the data unless you pay them a certain amount of money, or they have encrypted the data and if you pay them they'll release it, or they've taken your data and they're going to expose it unless you pay them. Some type of extortion where you're being asked for a payment to keep your data safe. The policy will respond to that type of payment. So those are the four basic coverages that you'll find in a cyber insurance policy. There's also, in the event management section, there's also some coverage for costs to restore, to collect, and recreate data that may have been lost during a breach. Go to the next slide. So I just have a quick claims example here on the next slide. But in this example, this example shows that employees remain the largest threat. I don't know if the slide's coming up, if you can see it, but employees really are the largest threats. Almost all breaches we see involve employee error, and that's why employee training is really one of the most important things you can do. Your company can have the best tools. We don't ever see breaches where the tool fails, where the technology fails. The technology works. It's designed to work. But what happens is that the employees either let a phishing attack in, or they weren't checking the logs the way they were supposed to. They were, clicking on things, sending information that they shouldn't be sending, or sending out information to people they shouldn't be sending information to. So we have to make sure the employees are trained. And if they're not, in this specific example, the employee actually stole customer information and then sold it. There have to obviously be protections around that, and employees need to understand about the protection of confidential data. And then this enables a heist of $13 million from stealing money through ATM cards. But it really, we do see that's a common theme, is that there's always an employee failure in a breach. If we go to the next slide, this is a new policy that we're offering at AIG, and we have 3 other carriers that have followed the release of this particular product. So this is a very new product. It came out last year, and it deals with the property damage and bodily injury exposure that you can have from a cyber attack. So for companies that are concerned about this being exposure for them, most energy companies, transportation providers, manufacturers, healthcare companies are very concerned about a cyber attack actually resulting in physical damage or bodily harm. And this is where companies thought that they had coverage under their GL or their property policies. Those policies are highly manuscripted, so I can't tell you whether they do have coverage or not, but there is those policies are not designed to cover cyber. They don't specifically cover cyber. And for companies that are very concerned and want to be able to tell their boards that they have coverage if there's a resulting property damage or bodily injury exposure, this type of policy would be something that would help them. It's a policy that really follows your property and casualty policy or whatever other policies you have. It sits over them like an umbrella, and if those policies don't respond, then this policy would drop down to respond to the cyber attack that results in property damage or bodily injury. So it's a new exposure that companies are starting to, we've seen some activity in this space, and companies are starting to get more concerned about this, and they're drilling down into their property policies and their GL policies, and they're realizing that there are a lot of exclusions in there that can exclude cyber attacks. For example, in property, many property policies have terrorism exclusions, and a number of property policies for energy companies have specific cyber exclusions. So those two things are very clear that that's not good for cyber risk. But there's other data exclusions and intentional acts exclusions that could be of concern as well. So this is a solution that is available to companies that are concerned and want to have affirmative coverage for cyber attacks that result in property damage or bodily injury. On the next slide, we show a case study of one of the most recent attacks that we know of that resulted in a property damage. At the end of last year, the German government revealed that a steel mill which had an explosion was actually the result of a cyber attack. So hackers were able to get in and disrupt the control system for the blast furnace. The furnace couldn't be shut down, and there was some kind of massive damage. But it's been very quiet. We've tried very hard to get more information on this, but this is really all the information that we've been able to get. There have been examples of other things, pipes exploding, a problem with a dam. So we are seeing attacks that have been launched that do result in property damage. I think this is a growing concern for organizations. So the next slide. The next slide just had a few more examples, just because I know this isn't as well known, this type of exposure. But a good example is also the Saudi Aramco attack, which destroyed 30,000 computers. Okay. Well, on the next slide, you'll see just some information there about when you buy a cyber insurance policy, you're not just getting an insurance policy, you're also getting, many carriers are offering upfront services to help improve the level of security that's already in place at an organization. And then a big part of the policy is that we're really helping to manage the breach after it occurs. So for AIG, and a number of carriers offer these upfront services. Some of them are similar things, but for AIG specifically, we have an app that you can get for free on your iPhone, iPad, AIG Cyber Edge. And if you download that app, we have all kinds of news stories about cyber attacks. We have a data breach map that will show you breaches around the world, updated every day. And we have a lot of literature that we've written all over the world about different issues, different industries, different issues around cyber exposure. So there's a lot of information there for someone that's looking to get more education about what types of risks they face from a cybersecurity perspective. We also offer tools for training and to help block attacks from coming in a system. We offer free vulnerability scans from IBM along with consultation, and we partner with other vendors to offer discounted services for like darknet searches and things like that. So insurance companies are partnering with vendors to help keep the insurance companies educated on the evolving exposure in this area, but also to bring some valuable services to our clients, either complimentary or at a discounted rate. So when you purchase insurance, you are getting some upfront benefit before you even get into the policy. Then we have the policy, and I went through the coverages that are offered within a cyber policy. And then when you have a breach, As much as companies tell us they're prepared for a breach, we really find that they're not, even the larger companies. So, of course, during the underwriting process, we ask about the incident response plan, and everyone has a plan. But when the breach actually occurs, I think companies are really surprised, and they're surprised at the level of attention that they're getting. And so when they call us, there's kind of this panic that's going over them. They've got, law enforcement in asking questions. They have the media asking questions. They're being evaluated by other government officials, and compliance has a lot of questions. And then, of course, you've got the management of the company wanting to know what needs to be done. And at that time, it's hard to figure out, who should be our forensic expert and things like that. So we handle breaches every day. We're receiving 2.5 breaches a day. We've handled 6,500 breaches over the past years. So this is what we do. We know who the strong law firms are in this area, the forensic firms, the PR firms. They all work together. People on our panel all know each other, so we can create a very smooth process for the client and helping them through the situation, navigating all the disclosure laws, and figuring out how to handle the breach in the most effective manner. So it's a real value that insurance companies bring to the table. This next slide, I won't go through it too much, but just talking about, you can get a view here of really the things that we're asking for in our application process and underwriting process. It's more these types of things about controls at the organization than really about those very specific types of tools that you may be using. The next slide just gives a quick view of one of the reasons why we feel that not all companies are buying cyber insurance right now is because it's very tough to determine what you think your exposure is and what the value of your exposure is. And companies are investing in technology and other tools to help lower their risk, and that's what they should do. They shouldn't be making those investments, trying to manage this as a business, and then deciding how much risk they're willing to accept. And the difference between how far they can reduce their exposure and what they're willing to accept really gives guidance on the types of insurance that you need, the amounts of limits that you need, and what you should be looking for to help manage that gap between what you're willing to accept and how far you think you can reduce your liability and exposures. For those that aren't familiar with the cybersecurity NIST framework, that was released. This just gives you a quick overview. It's focused on these 5 areas of identify, protect, defend, respond, recover. And this is something that one of the tools that we do offer upfront to our clients is a tool that's developed by RSA, where you can the organization can go on, map themselves to the NIST framework, and also map to where their desired state is. And then you can do a gap analysis of where you are today and where you want to get to. And we're supporting the NIST framework because we think it's a good baseline across industry and can help really set the framework for moving companies to a higher security maturity level. We talked a little bit about best practices. So we have some, very easy best practices that are here. I want to leave time for questions, so I'm not going to go into talking about all of them, but just things like, changing default credentials. We've seen many breaches where, they're just getting their hands on the default passwords, and then they're able to get access to all of these systems. That's a very, very basic control that should be implemented, and it's these types of things, restricting users to just what they need to be using. You don't need to give access to everyone. There's, the senior people are being targeted because it's believed that they have access to all the systems. I know certainly at AIG they probably use the systems the least of anyone, so they don't really need access to the system. So there's a lot of basic procedures that a company can put into place. Having an incident response plan and actually acting it through, we think is extremely valuable, because the way you handle a breach can make a difference in what your liability is going to be. And you have to practice it. You have to do tabletop exercises. And these are some basic things we still don't see companies doing on a regular basis. But implementing these types of basic controls will significantly reduce the risk. And on the last slide, recently the DOJ came out with an incident preparedness checklist of what you should do before there's an attack, during an attack, and after an attack. And here too, we're very much in line with what the DOJ put together. And again, there are very basic procedures here that all companies can implement and aren't very costly. And these types of controls really reduce the risk. And that's what we've seen from all the claims that we've handled, that it's really a lot of basic steps, making sure employees are trained, making sure you have a plan in place, making sure that you know who you're going to engage with, making sure that you're using information sharing that's available to you, some very basic steps. So I have that here for your review, but we have a few minutes left, so I wanted to open it up for some questions.
Hey guys, this is Mike. Before we get to questions, I'm going to give you a quick 2-minute overview on Beyond Trust, and then we will get to some of the questions. So Sarah, why don't you bang through that? Perfect. So since we are pushing right up against it, and we do have a bunch of questions, I think we did a really good job. Tracy did a good job of talking and kind of talking through some of the high-level concepts about proactivity and visibility and insight. Where Beyond Trust, Sarah, if you wouldn't mind bouncing out to the next slide, fits in is there were two things she had about 8 bullet points on her slide about, which I think were all great points, right? I've come from a background of pen testing, crypto, and what are some of the other things? And PKI, so fairly technical stuff. So I think that all those things were great. I would actually have to say that probably the most important thing I think you can do is test your users. There seems to have been an unwillingness to address users, the rights, the privileges they have, the access. You know, you can put down the best line of defense, and if your users are still clicking on email links at a 1 in 4 ratio, it doesn't matter what the hell you do, quite frankly. You've got a much bigger problem. So, you know, work with HR, define training policies, and cut down on the incidents where they're compromising their data. And they're compromising your organization. Some of the most sophisticated attacks are actually the most unsophisticated. They just send a link in a PDF or a spreadsheet to people in the organization. They grab emails, they send them in. If somebody clicks, that machine's owned. Where Beyond Trust helps, there were two things there of those 8, and you can see here is that we have a platform and it has 2 solutions in it. It's vulnerability management with Retina and Power Broker, which gives you privilege management. So we talked about that. So defining least privilege and managing the rights and privileges that people have. So basically, you only want to give people the rights and access to applications that they need to for their business, right? You want to give them whatever they need to do their job, but you don't want to give everybody admin on their local machines. They don't need it. You don't need to give every developer or everybody in your organization root access to your critical business information servers. That can be managed a little bit. And look, I've been doing this since '98, so people are going to bitch and they're going to say, oh, but you're getting in the way, I need this access. No, you really don't, right? You don't need it all the time. So managing what people can have access to, right, for defining a business need and making it super easy and not getting in the way, right, which is, I know, another thing. People want uptime. They don't want security to be in the way. And that's what we're talking about here. Very non-invasive, but allowing you to kind of have a compensating control internally. Because what this allows you to do is say, if there is a breach, and I would say that the mentality shift now is that CISOs, they believe, I think it was the FBI to Robert Mueller said, there are only 2 kinds of companies out there, the kind of companies that have been breached and the kind of companies that have been breached and don't know it. So I think CISOs are kind of coming around to this mentality, and the idea is say, well, look, if we get breached and somebody gets on somebody's machine, because that's what they attack, right? we have done an excellent job as an industry kind of creating this hard outer layer that is somewhat impenetrable. It's very hard to get in from a remote, attack a web server or some kind of email server. That's super hard. But what's really easy is just sending emails to users. So that's what attackers do. So one of the first things is kind of locking down those desktops. So people can't exploit the privileges. And coming from, I did 10 years in a pen testing company, and this was it. They pen test, they send an exploit, they exploit the vulnerability, they get a beachhead, they escalate privileges. That's it. That's what happens. So if you can eliminate the privilege escalation, you're mitigating a heck of a lot of the controls. On the other side of the house, we have Retina, which is vulnerability management, which really allows you to scan your outer layer for vulnerabilities. Scan network devices, servers, web applications, and take a look from the inside and from the outside where you might have known vulnerabilities. Now, a known vulnerability is basically Microsoft just came out with a whole bunch, right, yesterday? And Adobe comes out and Flash. So, we have a product that provides checks, and those checks, you say, oh, look, I want to look, there's 60, 70,000 of them, the product runs, and then says, oh, look, you do have some of these vulnerabilities here. So you should fix them, and here's the priority order of which to fix them in. The other thing that we talked a little bit about was threat intelligence. I wrote it down. Threat and intelligence is an absolute oxymoron right now. It just is. I'd say a lot of people talk about it. Very few people do it well, and it's still absolutely an evolving practice. So if you could flip to the next one. I don't remember if I have another one, but if I do, I'll speak to it. Oh, yeah. So a lot of people like what we do. One of the things that we talked about, too, was compliance frameworks. Privilege management is prevalent in almost every set of guidance. So NIST, it's in there. It's in the standardized controls. It's in PCI. It's in HIPAA, SOX, the Australian Signals document, ISO. So these things are prevalent and pretty much required to do for any type of compliance that you would need to have signed off by an auditor or best practice guidance, right? Depending on where you come down on some of the Fed stuff, it's strongly suggested. And I know you can't see here, but I'm doing the finger air quotes. So that's all I'm going to say today. I want to get back to some of the questions. Tracy, oh, yeah, sorry, sir. We do have a poll. If you guys wouldn't mind answering the poll question, and I'll start banging out some of these questions. But Tracy, how do you decide, what policy to go with when when there isn't necessarily any more funding, right? How do you balance the funding, the policy, and the risk altogether?
So, the funding for the policy. I'm not sure how companies, I think, brokers probably could give better direction on that, but I think that, I don't know if that comes out of a separate budget from a risk management standpoint, but I think that you have to show that you've done what you can from a technology standpoint, from a training standpoint, from practices within the organization to lower your risk as much as possible. And then the organization has to decide, do they want, now they're still exposed a certain amount, do they want to take on all that exposure themselves, or do they want to transfer all or some of that risk? And then you have to take a look at the insurance, how much that's going to cost, and if that makes sense for an organization. But, the pricing on insurance, when you're talking about, buying a $100 million tower, a $300 million tower, and you actually have a claim, these costs go very, very quickly, and there's, it seems that, certainly it's money well spent to be able to reimburse those costs. There's quite a lot of costs that are paid for by the policy. The policy itself doesn't make you stronger, but it does help provide protections to mitigate some of that exposure that's left after you've done all that you can within the organization. But making that decision of how much to spend on IT, I think is an ongoing challenge for CISOs and companies. Do we just keep spending and spending? Where do we stop? What's the value of this additional tool? And I think I do see some tools coming to market. There's probably things I'm not aware of, but there are some tools out there coming to market that help to evaluate that value.
It's, one thing that I just wanted to ask somebody who knows this is, to me, cyber insurance, and tell me why I'm wrong, and I'm sure you will, but it's, with security, there are a million things, and you just said it, that people could buy. I feel like there's such a gray area in terms of not only purchasing but using the technology to its maximum benefit, that there's so many loopholes for insurance companies to deny claims because, well, you have this piece of technology like, I forget, there was a supermarket, it was Hannaford's, there was a POS system, and it was vulnerabilities, and they were 100% PCI certified and got hacked. And this was several years ago. So I feel like there's so many loopholes, right, in terms of not only having technology but using it to maximum efficiency that an insurance company could get out of almost any claim. Tell me why I'm wrong.
Well, you can only do that if you have those kinds of exclusions in your policies. So you have to take a look at what you're buying, and does your policy say that you have to be PCI compliant? I'm not familiar with all the policies that are out there, but I know for sure that there's policies that don't say that. And so, you have to know what you're buying. As you said before, if you have those exclusions in your policy and you're paying less, a company might feel comfortable with that because maybe they're only buying a policy for contractual reasons and they don't really care about the coverage, so they'd rather pay less. They don't mind having the exclusions. So that's a product that's available. But if you really want to have full cover and you don't want to have exclusions for having to maintain a certain level of practice, those types of policies are out there. There is an underwriting process, but especially for larger companies, a lot of that is a conference call where there's a discussion. So the companies get to explain how they do certain things, and that they are PCI compliant right now, and this is how frequently they get tested. But there's not an ability within the form, because there's no exclusion that says if you're not PCI compliant, you're not going to have coverage. So I think it is a little complex because there is a big difference from one form to another. But it's something that you have to get an insurance broker and really, understand the coverage that you're buying and make it clear to the broker that you want to have a policy that doesn't have those types of limitations, unless there's reasons why you do want those limitations.
Right. Fair enough. Hey, Tracy, we're right up against it, so I want to thank you for your time. I thought this was super interesting. I did a little work with this in 2007, and it's come leaps and bounds since then. So, guys and folks out there, it's nice to see everybody pretty much stuck around. So if you have any questions, shoot them over. We'll be sure to hook you up with Tracy. The presentation will be sent out. We'll email you that. And it was great that so many people could attend. So is there anything I'm forgetting?
We're all good. Just a reminder, as Mike said, we will be sending you guys a link to the recording and the presentation later this week. It will come from communications@beyondtrust.com, so be on the lookout for that. Thanks again, Tracy. Thank you, Mike, and take care, guys. See you at the next one.
Thanks. Bye-bye.